Hi, my name is Sam DBS, and my final project is on the analysis of DraftKings and Penn National Gaming, comparing the two, and then ultimately deciding to analyze Penn National. So the next step for me was comparing both Penn and DraftKings to the S&P 500 and trying to understand which one may move best with the market in the future. So first, I kind of gathered the current stock prices of $52.36 for DraftKings and $71.06 for Penn. And this was important for the rest of the analysis that I was about to do. After that, I decided to just run a regular descriptive statistics function on both Penn and DraftKings and see if I could just get a feel for the data that I was using. The data that I was using came from a download off of Yahoo of the historical data from July 25th, 2019, which is when DraftKings hit the market. Penn was on the market before then. So at this point, I'm analyzing all that historical data from Yahoo. I get a mean of 53.38 with a confidence interval of 6.43 for Penn, and for DraftKings, a mean of 34.5 with a confidence interval of 3.72. Next, I kind of wanted to really see how they did relative to the market. So I took the percent yields of Penn, DraftKings, and S&P in the S&P 500, and the percent weekly returns for all these stocks, and then after that, I used the slope function to calculate beta, which is where I found something very interesting. Penn had a beta of 0.41, which I kind of like, but strangely, I found out that DraftKings has a negative beta of negative 0.37. So after this very confusing discovery, this led me to only focus my future efforts on Penn, and specifically Penn from the time they acquired Barstool, which was January 29th, 2020, giving me a whole new set of historical stock price data. And this gave me a mean stock price of $63.96 with a confidence interval of 7.23 and 95%. And the beta stayed the same. The standard deviation was almost the same at 32.48, and there was 25 less data points. However, my graph still looked pretty similar. So knowing all this information, it was time for me to perform my first hypothesis test on the future of the Barstool stock prices. So I state my null hypothesis as less than or equal to 87, giving me an alternative hypothesis of greater than 87. This is the price that I'm hoping the stock reaches once I invest in some shares. So, first thing I did for my hypothesis test was to get a count of the weeks that I was analyzing, and that was 80. Simply verified my mean, verified my standard deviation, which is definitely a little bit big. And I took that into consideration, and then I calculated my standard error, which ended up also being kind of big at 3.63. And my test stats, since my hypothesis number was so much higher than my mean, ended up being negative 6.35. And with a degrees of freedom of 79, I found my lower tail p-value to be a number so tiny it's not even worth typing, and my upper p-value to be 0.9999993, which means that I had to accept my null hypothesis of less than or 80 or equal to 87 and reject my alternative that I was hoping for of greater than 87, because I based this off of an alpha of 0.05. Since I was not satisfied with these results, however, I kind of noticed that about a year ago that the share price hit 49 and then kind of took off from there in August 3rd of 2020. So I decided to analyze data from almost a year ago, giving me a mean of 82.59, which was a lot closer to my original hypothesized number. I said, okay, well, let me go through all of these steps again. My sample size was 54, my standard deviation was 20. I also obtained a standard error of 2.8, giving me a test stat of negative 1.5, and with all this, I got a lower tail p-value of 0.063 and an upper p-value of 0.936, which is still not less than my alpha, and therefore I ended up with the same results after all that recalculation.